Welcome. The company being analyzed today is SJS Enterprises Limited. This is a very exciting company. It is in the design aesthetic market. Basically, what it does is it can design a product for car manufacturers, a product for consumer appliances companies, and it will design and manufacture a product. So all the way from designing to manufacturing a product for them. So we will look at its products, we will look at its financials, its balance sheet, its future growth outlook, and much more. This is going to be a long segment. So first, we have the market cap. 4,500 crore rupees is the current market cap of the company. The current price of one share is 1,435 rupees. Okay. Book value. What is book value? Assets minus liabilities. So the book value per share is 216 rupees. The price to earnings ratio, right below me, 36.2. Hmm, pretty high price to earnings ratio. Return on equity 18.9% or 19%. Nice. Return on capital employed of 22.8%. Pretty nice, really nice. So taking a look at its financials, here we have its profit and loss from 2022 to 2025. All right. So we have sales. All these numbers are in crores, by the way. We have sales, we have operating profit, we have operating profit margin, we have profit before tax, and finally we have net profit down there. Okay. So let's go all the way to 2025. In fiscal year 2025, the company had sales worth of 760 crores. All right. It had operating profit of 196 crores. Okay. An operating profit margin of 26%. All right. Very nice operating profit margin, very consistent 25-26% operating profit margin. And net profit after paying a 22% effective tax rate, 119 crores. So that is really good. If we take a look at sales growth numbers, so below the sales, you can see the growth numbers. 17% sales growth in 2023, 44% sales growth in 2024, 21% sales growth in 2025. All right. Here we can see the compounded profit growth. For the last 3 years, it's been 28% annualized compounded sales growth. Really, really nice. And last 3 years, compounded sales growth has been 27%, profit growth 28%. Hmm. And for the last 3 years, the return on equity has been consistent, 18%, 18%, 17.8%. So 18% consistent return on equity. So that was a summary of its financials. Okay, yeah, I forgot to show cash flow from operating activities. Okay, these are the company's cash flow. Pay attention to the one figure right now, cash flow from operating activities. Okay, so in 2022, it was 61 crores. 2023, it generated 87 crores of cash flows, pure cash flows. 2024, 109 crores. 2025, 163 crores. So extremely impressive growth in cash flow from operating activities. All right, extremely impressive growth. So these were a summary of its financials. It's a very profitable company. All right. If you want to take a look at its net profit margins, they're around 16%. The blue things are the sales, the green lines are the net profit margins, and the yellow are the operating profit margins. So you saw operating profit margins 25-26%, and the net profit margins really nice 15%, 16% in that range or are reaching that range, 14 to 16% range net profit margins. So profitable company, pretty high price to earnings ratio, very nice return capital employed, return on equity. And yeah, that was a summary of its financials, really fast growing cash flows. Now let's take a look at what the company actually does. Okay. So here we have the annual report of the company where we can find information. Now here it says that SJS Enterprises was established in 1987. It's a leading player in the Indian decorative aesthetic segment. All right. So its products are more for aesthetic. They do have application, of course, they're important, but they also have an aesthetic to them, which is the main point of focus there. All right. With a customer centric approach, they specialize in designing, developing, and manufacturing a wide range of customized products across 14 categories, efficiently serving 7 different segments. All right. So they design, they develop, and they manufacture a wide range of customized products. Okay. Customized product, a product which caters to the particular needs of a particular customer. And yeah, wide range of products serving 7 different industries or segments. Okay. So then we move on to this. What are the industries it and segments it serves? Medical devices it can manufacture, farm equipment it can manufacture, commercial vehicles, not commercial vehicles, but products serving the commercial vehicle segment. Okay, products for passenger vehicles, products for sanitary ware, products for consumer appliances. That is, its products will be used in electricals or consumer appliances. Its products will be used in medical devices. Its products can be used in passenger vehicles, two wheelers. Okay, they form a part of a car and all that. So they have two subsidiaries. Now, we are covering subsidiaries because, in its case, they form a really big part of its revenue also. So we have first SJS Decoplast. All right. They acquired this company in 2021, and this company manufactures chrome plated, painted, injection molded plastic parts for two wheelers, passenger vehicles, consumer appliances, farm equipment, and sanitary ware. Now, if you're wondering what chrome plated is, chromium, the metal chromium. So chrome plated products, the products will have a plate, a thin plating of chromium over it. And they basically make plastic products, chrome plated plastic products for two wheelers, sanitary ware, consumer appliances, farm equipment, and passenger vehicles also. This was one of the subsidiaries. And we have Walter Pack India, WPI. This was a subsidiary they acquired in 2023. All right, they have a 90% stake in the company. This company specializes in designing and manufacturing premium functional decorative parts for the passenger vehicles and consumer electrical segments in India. With WPI's expertise in advanced IMD, IMF, and IML technologies, I don't know the meaning of these, but we can just take a look at them and think of them as new products for the company's portfolio. So it's introducing new advanced products. Hey, if these products gain attraction, that's a positive for the company. It shows that the company has an ability to keep introducing new products that show really good revenue growth. Okay, so we have WPI and SJS, and we can see both of their products, they are different. They're different, but they have a core function. Very good word they said. Functional decorative parts. Okay, functional decorative parts, and both of them serve several types of segments. So, okay, these are the subsidiaries we covered. Moving on, what is this? Yeah, marquee clients. Ooh, nice list. A lot of recognizable names. So their main clients, big clients. Okay, first we have automotive companies. OEM is original equipment manufacturer. So we have TVS, Hero MotoCorp, Honda Motorcycles, okay, Bajaj, Royal Enfield, Suzuki Motorcycle, Mahindra and Mahindra, Tata Motors, Mount Suzuki, Kia, Honda. We got Volkswagen, we got FCA. I think that's a US company. We got Iker, we got Ashok Leyland. Basically, SJS products, the SJS's products are used in the products of these companies. They will be used in the cars of Volkswagen, used in the cars of Maruti. So we see some massive clients, even Ola, even John Deere. See, John Deere, this is like a tractor company, extremely massive tractor company, US. Then tier one auto component suppliers, okay, Foxconn, all right. Consumer appliance companies like Whirlpool, Samsung, Godrej, Panasonic, all right. Dixon Technologies, throwback. Even for telecom companies, it manufactures some products and some other companies also. So wide range, or it seems like clients, some very big companies, recognizable companies. Then we move on to see its products. Okay, what does it actually produce? Now, I don't know what these things are, but they do look recognizable. So first we have decals and body graphics. Okay, they are primarily used on two-wheelers. Okay, decals and body graphics enhance the overall experience of the vehicle and provide visual appeal. Okay, these look nice. Body graphics, I guess, graphics of a body. 2D leaks and dials. They find application, as speed or revolutions per minute indicators in speedometers. All right, so these are like a functional decorator. These are very functional things. They use in speedometers for all. All right. What else? They make domes. Okay, they make domes. What else do they make? 3D appliques and dials. Okay, 3D appliques and dials. Again, I think used to show revolutions per minute, like the speed. Okay, I think I've seen these 3D lux badges. All right, for I guess cars and all. What else? What else? Aluminium badges. Used in two-wheelers, passenger vehicles, and even consumer appliances. Okay, I think I've seen this overlays. These look okay. What is this? Control panel interfaces in consumer appliances. Ooh, all right. Okay, this is very recognizable. Ooh, look at that. I've seen that before. Oh, okay. What is this? IMD, IML, IMF. Oh, this is from WPI. IML is in mold labeling. Okay, IMD is in mold decorations. IMF is in mold forming. I don't know what it means, but it seems to be very high tech stuff. And again, more products for the company, and these look really, really recognizable. Okay, okay, so very useful products, it seems like. We got illuminated logos, nice. Optical plastics cover glasses, we got lens mark assembly, aftermarket transformer, chrome plated and painted products. Okay, recognizable stuff, more recognizable stuff. So basically, those are, I don't know what those products were, but there were a wide range of them. There are many of them, and many of them stated they have uses in different kinds of industries. So I guess that's a plus. That's a plus. Then we're going to take a look at its financials. Ooh, we got some long dated financials. Revenue from operations. If I revenue from operations, these are all in millions of rupees. Okay. So 7,604.86 million rupees in fiscal year 2026, 2025, fiscal year 2025, that is 760 crores, 620 crores in 2024 revenue, 2021, 251 crores. So massive consistent growth in revenue. Nice. Then we see EBITDA and EBITDA margin. EBITDA of 203.2 crores in 2024-2025. Okay. 159.9 crores in fiscal year 2024, and we see a good rise. In 2021, EBITDA margin, this number, these are the margins, 31.2% fell and has been consistent ever since at a 26 point something percent. Earnings per share, now I don't know if these are accounting for dilution, but I'm supposing they are not. But we should check this if they're accounting for dilution. Massive increase in earnings per share also, more than doubled in the last 4 years. Yes. Profit after tax margin, pretty consistent over the last 4 years, 15% in that range. Was at a high of 19% in 2020, fiscal year 2021. All right. Then net worth, assets minus liabilities. Okay. Return on capital employed. What is it looking like? 25.66%. Did reach highs of 33% in 2023. Okay. Its assets have been expanding a lot. Of course, the company will be expanding. So, okay. Net worth has seen, okay. Ooh, free cash flow. Free cash flow. Wow. They've actually calculated free cash flow. Very impressive increase, it seems. At least in the last 3 years. Very impressive increase in free cash flow. 123 crores of free cash flow in 2025 compared to 75 crores of free cash flow in 2023. 2024, sorry, 2024. And 600 crores, so 60 crores in 2023. I'm mumbling the numbers. Return on equity very consistent, and 15%, 17%. Okay, consistent return on equity, very nice. All right. So we saw all the financial, we saw the products. I couldn't understand the products, but It seems they're introducing more and more stuff. There's a wide variety of them. So that's good. That's good. Um, I think one thing I want to show was this. Now, this is for fiscal year 2025 only. It's the revenue breakup. Okay. 51% of revenue came of this company. Okay. SJS Enterprises, the consolidated revenue, 51.7% came from SJS, 25.6% came from Decoplast. This was the chromium products. And 22% came from WPI. It was the IMD, IML, that stuff. So two subsidiaries had it recently acquired, let now have more than 50% share, or close to 51% share of total revenue. Two subsidiaries acquired in the last 3 years. Then revenue segment, revenue by end segments. So 34% of revenue is generated from products sold for two-wheelers. 40% of revenue is generated from products used in passenger vehicles. 20% of revenue was generated from selling products used in consumer appliances, and 6% is others. Revenue for geography, 7.5% were by exports, and 92.5% were by domestic. Pretty good. Finally, we have new products launched. Okay, new products launched this fiscal year 2025. New products launch. All right. Again, very technical stuff. I will just have a nice overview of it. So, developed IML part. What was IML? It was in mold labeling, in mold labeling in the steering wheel decorative cover. Okay. They developed a 3D formed aluminium logo. Ooh, 3D formed aluminium logo demonstrating high level of precision printing capabilities. Okay. They introduced a standalone illuminated branding logos. All right, this they have submitted proof of concept OEMs. Okay, they have developed a IML for two-wheeler dashboard. Okay, in more labeling for them. Multiple color printing established through innovative rainbow. Okay, developed and ramped up optical light plastic with light management material. Unveiled a first 3D locks with 3D base, converting an existing two-wheeler logo from complex chrome plating to ROHS compliant IML, a lot of IML, okay, in more labeling, a lot of in more labeling. They did mention it was some new tech or new subsidiary, okay. So a lot of IML, a lot of new products being introduced. I don't understand this stuff, but it seems, hey, they're introducing more products. That's a plus. That's a plus. So this was some of information that we had. Now let's take a look at future growth and the balance sheet. Okay, we should not leave those things. Now, this is for quarter one fiscal year 2026. The latest results are out. I just want to show this. In quarter one fiscal year 2026, they outgrew the industry by 19 times. See, they outgrew the industry. The industry grew by 1.2%. That is a two-wheeler plus passenger vehicles segment grew by 1.2% quarter one fiscal year 2026. Okay, they grew by 22.8%. You can see it. Massive growth, 19 times. All right, these are the production volumes versus SJS's own sales. Then they have been outperforming the industry growth by 23 consecutive quarters, 23 consecutive quarters. So they have said this is industry production volume versus year-on-year sales. I hope it means by year-on-year sales, they're counting total volumes. I hope it's not they're counting SGS's revenue versus industries like real volume, like number of cars sold versus SGS's just pure revenue. Maybe they're doing that. Maybe that's the correct way. But they did say sales. So, how much did the recent quarter revenue grow? Okay. Recent revenue growth was actually 11%, and they have mentioned 22%. Fine. Then this must be volume growth. 22% must be volume growth. All right, my fault. This must be volume growth. So they outgrew the industry by 19x. Then in quarter one fiscal 2026, they have been growing their already accounts. There's some big accounts that they had, and they have added some new customers. Now, Hero is mentioned. Okay, okay. So they're growing mega accounts. They're growing their mega accounts. These are some mega accounts. And these are some accounts they added in quarter one fiscal year 2026. I hope so. That's fiscal 2026. Could be new accounts. Basically, these are new accounts they added. Hero, Yazaki, Autolive, which is in the US, FCA, Fiat Chrysler Automobiles, which is also in the US. So for growth, they are again acquiring more clients and they're growing their mega accounts. Here it says key business projects won. A lot of clients. Then what did I want to show? I wanted to show, I think you've already seen this. Yeah, we've already seen this. Future growth outlook. Finally, future growth outlook. How's the future growth looking like? Now, here they've mentioned something pretty good. The legacy kit value per vehicle was earlier 1200 to 1500 rupees. So I guess the value of the products used in a vehicle amounted to 1200 to 1500 rupees before. Then they acquired WPI, whatever the name was, with all the IML, IMD technology. Because of them, they said post WPI, it became 3500 to 5000 rupees per vehicle, current kit value. All right. And now they're projecting 4 to 6 time growth per vehicle. So what should this be? Where's my calculator? I have no calculator. So 14,000 rupees to 20,000 rupees at the lower band. They want the kit, oh sorry, the price of one kit per vehicle. The price of the kit per vehicle, they want 4 to 6%, 4 to 6 times growth. That's what their projections are. All right. This is for their these products. Then, then. Here, there are more projections. They're going to be introducing new types of more advanced products plus premium products to drive value. All right. Here they have said 300 to 500 rupees per vehicle. Okay, that is the value of the products being used per vehicle. They are projecting 1.5 to 2x growth per vehicle for the future kit value. Here they are introducing, see, some new products for two-wheelers like optical plastics, touch screens, aluminum logos, illuminated logos. All right. Again, aesthetics being a key focus. Here they've said they're introducing new products for passenger vehicles like aluminum caps, sorry, wheel caps and aluminum badges, IML, in-mold labeling interiors, optical plastic, touch screen cover glass. So I guess optical plastic seems like a synonym for a touch screen. Okay, good, nice. Then finally, for future growth, okay, we are still on future growth. Then organic growth. They're pursuing growth through two things. One is organic and one is inorganic. Inorganic basically means uh, acquiring some companies. Now, first, products. The company is focusing on development of new technologies and advancements and advancing products. Hold up. This is really shaky. It shouldn't be like that. Fine. Yes, so company is focusing on development of new technologies and advanced products. All right. They're intending to develop and introduce optical cover glasses, illuminated logos, in molded electronic parts. All right. So they are investing in building new technologies. Then key customers, they're trying to grow the mega accounts. All right. They're increasing the customer base by marketing existing products to new customers and exploring cross-selling opportunities. All right. And they're building mega accounts with existing customers by expanding the array of products. So they are trying to sell more products to the same customers and existing products to more customers. Okay. Then exports, they're trying to increase the export revenue. All right. Penetrating deeper in existing geographies and enter new geographies. They are having a strong focus on expanding in the ASEAN region, all right? Forgotten the name, what this means. Then they're trying to strengthen the sales force in Turkey, Brazil, Argentina, Colombia, and recently added South Korea, all right? And capacity expansion. SJS Decoplast, their again subsidiary, contributing substantially to the revenue, is setting up a new plant for chrome plating and painting, likely to commission in Q3 fiscal year 2026. So we currently had Q1 fiscal year 2026, so two more quarters. Okay, two more quarters, it's likely to be commissioned in, okay, one more quarter. Yeah, one more quarter later, likely to be commissioned then. New greenfield plant for optical cover glass and display business being set up at Hosur. Okay, it's progressing well on capacity expansion at SJS Bangalore to cater to significant new business opportunities. All right, new products and expansion into new markets. Now we covered a lot of things about, so particularly just products. Okay, a lot of technical stuff about products. Of course, new products, they will be aiming them to be more high margin. And under these new products, I would just like to show, oh yeah, sorry, inorganic growth. We didn't cover inorganic growth. So they say mergers and acquisitions is a key pillar for growth. All right. SGS will continue to explore new opportunities for value accretive acquisitions. For example, in 2023, they acquired WPI, whose revenue has grown 1.5 times since its acquisition. All right. Then SGS Decoplast, they acquired in fiscal year 2022. All right. The revenue has grown by three times, 3x revenue growth. All right. And yeah, we already saw this. Building presence in consumer industries. Okay, they already have a presence. Like 17% of the revenue comes from consumer already. Trying to enter into new geographies and increasing their penetration into existing markets. Now, cross-selling opportunities is interesting. Cross-selling, basically, they will be able to sell more and more of the services to the same customers, right? Like we already saw, they were submitting samples to OEM suppliers. We had seen a part, we had read a part there. And yeah, they have recently gone into a lot of new products, which is good. Okay. Then let's cover their, yeah, what should we cover? Capital structure. Yes, capital structure. We have the capital structure of the company. As of Q1 fiscal year 2026, the long-term debt is zero. Short-term debt is 161 crores, sharp decline from fiscal year 2024. The total debt has declined sharply, currently 161 crores. The cash and cash equivalents of Q1 fiscal 26 are 1,472 million rupees. So 16 crores worth of debt, I'm supposing, and 147 crores worth of cash and cash equivalents. So its cash and cash equivalents are 131 crores more than its debt. Yeah, it seems okay, and it has, of course, a double A minus rating by ICRA. Okay, that's its credit rating. Again, strong cash flow generation. We already saw the massive growth in free cash flow, 120 crores in fiscal 25. And I want to show one last thing, and I can't seem to find that one last thing. Where is it? Okay, they have said they have started supplying to Hero MotoCorp during Q1 fiscal 26. During Q1 fiscal 2026 alone, they generated 32 crores worth of, again, free cash flow. All right. And the one last thing I actually wanted to show, which I can't find, which is embarrassing. Why can't I find it? I really, okay, yes, finally I found it. Yes. Of course, the page I thought we had covered already in the annual report. Yeah. Now, we talked a lot about products. New technology products contributed 25% of consolidated revenue during Q1 fiscal year 2026. 26, okay. So I guess all that talking about the portfolio, the products portfolio, paid off because it contributed to 25%. So it seems that the new products are actually contributing to revenue. Management has shown an ability, as of now, to keep introducing products that have a substantial impact on revenue. I guess management has also shown that like acquiring companies like SJS Decoplast, acquiring companies like WPI, they have been very good for the company. So mergers and acquisitions, it seems, have been reasonable. So that was it. The company does have a PE of what was that? 35 point something? 36.2. 36.2. Again, as we saw, the free cash flow for fiscal year 25 was 120 something crores. So 120 something crores divided by 4,501 crores gives it a free cash flow yield around almost 3%. Almost 3%. So that's pretty expensive yield, maybe. Again, I'm not registered by SEBI. I can't tell anyone anything. So that was the entire company. Now, as a summary, what did I learn? What did we learn? Aesthetics market, they make functional, decorative products. We saw a wide variety of products servicing a wide variety of clients, some massive names, all the way from like automotive sector to like factories and farms and all, farm equipment and all, like farm tractors, like John Deere. Remember that client? All the way to consumer appliances also. So different segments were being serviced, different industries were being serviced. It had massive clients, very strong cash flow generation, very strong balance sheet as far as we saw, cash and cash equivalents, just way more, 130 crores more than like debt. Jesus, they have like almost 3% of their market cap in cash and cash equivalents. New products, 25% of revenue quarter one fiscal 2026 came from new products only. For 23 consecutive quarters, they have been outgrowing the industry in terms of volume. They said their words, not mine. And 19 times outgrowing the industry is pretty insane. Exports contributed to around 6 to 7% of revenue, and they're trying to expand into new markets. And again, they're looking for more and more premium products. Like we saw earlier, their kit value, the value of their products in one vehicle, they're trying to increase that, trying to become more margin accretive, higher margins and all that. And again, a lot of cash flows, cash flow, cash flow, cash flow. So that was what was the company's name, SJS Enterprises. What are your views on the company? Very nice return on capital employed. And do tell your views on the company. And if you're invested in it, if you're planning to invest, if you don't plan to invest, your reasons and your belief in its growth. And do tell if you would like to see its latest con call, all right, conference call where managers invite shareholders, managers allow shareholders to ask questions and they personally give answers. SGS Enterprises has its own con calls. Would you like me to cover the highlights in these con calls? So do tell that in the comments. And yeah, have a nice day.